everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, just type OK in the question chat box if you're hearing me clearly and seeing my screen all right. Okay, great. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that no one trade is guaranteed to profit. With each trade you take, there's risk involved, and we'll go over some ideas in that regard in terms of how to manage risk. There are some nice tools in our web trader and mobile app that really makes the risk management side of things much easier. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, for anyone who might be brand new to things, what is fundamental analysis? Basically, it's the news. It can be different types of news. It could be stuff that's scheduled, like on an economic calendar. We'll look at a number of those today because there are some really key announcements today and tomorrow that have some great predictability in terms of the data surrounding those announcements that you might choose to trade on with some strategy concepts that we'll cover. And that's probably where we'll spend the bulk of our time, since there are a number of large announcements coming today and tomorrow. But there are other types of fundamental news. We can look at headlines that come in. Sometimes there are extraordinary stories, like a war breaking out or a pandemic or something that's not planned or scheduled, but is still news that can move the market in different segments of the market anyways. And so there's not a lot of that happening right now in terms of unexpected headlines popping up today. There obviously are some war implications in the Middle East, but nothing new necessarily that's occurred with any big headlines today. But the economic calendar really does have some information that we're expecting that could move the markets, and we'll take a look at that as a primary focus. Now, part of the fundamental analysis also can be backed up with technical analysis in terms of finding opportunistic entry points and exit points. So just because we're focusing on fundamental analysis, it doesn't mean that part of your trading strategy wouldn't still also be to look at the technical side of things as well, which we will do with some looks at charts maybe as well. Now, from our main website, which is where we are now, I want to show you that the AvaTrade Go mobile app is found under the trading platform section, and it has all of the same tools that we're about to look at in the web trader. So you can trade on your MT4 accounts, your MT5 accounts, using the AvaTrade Go mobile app as well as our web trader, and take advantage of the advanced functionality that you don't have directly on the MetaTrader platforms and apps. So the major app stores have the AvaTrade Go mobile app, or you could follow the links here to download the app as well. Now, to get into the web trader, we log in from the upper right corner of the main website, and then the web trader looks like this. So fundamentally, we can start on the economic calendar, which is found here. And then just want to make sure you're on the proper date. I'm going to switch back to the 4th, which is today. And you can pick the countries that you are interested in seeing the announcements on. You don't have to have every country. It could be just the ones that you're interested in. And so that filter helps weed out announcements that you're not interested in. Like I only have the medium and high level in terms of importance level listed. The low-level announcements I've excluded in the filter, so I don't waste my time looking at announcements that tend not to move the market as much. Okay, you tend to want to lean towards the high-level announcements. Some of the medium-level, importance-level announcements also can move the market quite a bit. The low-level announcements, not quite as much, but sometimes you can get movement from them. Now, the actual column is what we want to focus on and see how it compares to the forecast. Okay, and this is the prior month. So anyone who's new to looking at an economic calendar, these announcements already came in today. Okay, some came in better than expected, some came in worse than expected, and then using our tools, you could predict with some level of accuracy, the majority of the time, hopefully, that the movement on certain currency pairings in the past have gone up a certain percent of the time or down a certain percent of the time based on whether the numbers came in the actual column better or worse than the forecast column. Okay? And so if we go down past this red line, the announcements haven't occurred yet. So above the red line is the past, below the red line is the future. Okay? And so we're going to look towards the future to see what could you still try to take advantage of today to try and make some moves if you so chose. And so the first one we see here is inflation rate year over year, month over month coming in for Germany. So we could take a quick look at that and see, and that's in about 2 hours time from now. We could see using this tool, when this announcement has come in the past, and you see you've got a dozen instances in the past going back into last year, what has the movement done on different currency pairings when the numbers have come in? And so we can look at different currency pairings. I'll leave it on Euro USD for now. We can look at different time frames after those announcements to see how far and in what direction did the currency pairing move. I'll leave it on 4 hours for now. And we can look at all the events, which I think is less telling. You know, if we're looking at all of the events, it's almost 50-50. But if we start to qualify if the announcement came in better than expected or worse than expected, above forecast or below forecast, then was there statistical advantage to trade in a certain direction based on the past? So if the inflation rate came in above forecast in the past, no advantage. It's happened twice, not a lot of data points. It's only come in above forecast twice in the past year or so. And one time the market went up, one time it went down. That's not data I would be interested in trading on. So then we can look, well, what if it came in below forecast? And now you see a statistical advantage. If the inflationary data came in below forecast, then 2/3 of the time approximately, 63% compared to 38% bearish, 63% were bullish movements in the 4 hours after the announcement. So 2/3 of the time, if each time the data had come in below forecast for this announcement, if each time you would have bought and held for 4 hours, the range movement was nearly 50, a little over 53 pips, and 2/3 of the time you'd have been profiting if you'd have bought. So that tells me that today, if this announcement shows inflation below forecast, that I might look to buy depending on the entry point I can get, if I'm trying to follow what the data has done in the past. And it doesn't mean you're going to win every time, because 3 times it dropped, right? But if you try this over the course of a year and you do it 10 times, 12 times, like these data points, then you can see as a strategy for this particular announcement, was it profitable for the year? And you say, well, a year is a long time to wait. It really isn't. And keep in mind, this is only one announcement. There are dozens of different announcements you can do this on, so you'd have multiple trades each month using this type of strategy, multiple trades each week, in fact, using this strategy. And you could quickly start to have data to see which announcements are more successful than others over the course of a longer period of time, okay? So in this case, I would be looking maybe if the data came in below forecast to make a move, but if it comes in above forecast, I'm not interested. It's 50-50 movement here, half up, half down. Then what we can look at, okay, below forecast, yeah, after 4 hours, it was up, you know, significantly the majority of the time. You know, this one was up over 67 pips. You know, the smallest rise was 18 or 19 pips, and the rest were somewhere between 67 and 20 pips. Okay, so average maybe 40 pips rise. Why is it 53 pip range then? Because some of the movement was down before it went up, right? So if we look in the first 5 minutes, you see that 63% went down in the first 5 minutes. And the ones that went up only went up about maximum 8 pips or so. So it's not like once the data comes in, it was too late to make the move. It's not like in the first 30 seconds, it went that full 50 pip range movement and it was too late. What you see from the data is that even in the first 5 minutes of time, a lot of them actually went with a false move in the opposite direction or went up very little. But then after 4 hours, most of them were up. Okay, these over here on this side were down here in the first 5 minutes. But in the end, they ended up upward significantly. Okay, so you actually have a bigger profit potential than just the rise of these green candles here, because you actually could enter with a drop on a lot of these, okay, in the first 5 minutes, already knowing based on how the data came in that you wanted to buy, okay, regardless of how it moved, maybe downward in the initial time frame after the announcement. So a lot of times you have a false move that doesn't go in the same direction as the bigger move over the course of the next few hours. Okay, and so the data shows here that there could be a statistical advantage if the inflation rate comes in below forecast on this announcement to buy on the Euro USD, right? And we can look at different currency pairings. We can say, well, what about Euro GBP? Maybe there's a better advantage. There isn't. Look, it's the exact opposite. 75% of the time, the euro dropped against the pound when this happened. Okay, so now you can do two moves. You could be buying on Euro USD and selling on Euro pound. It's almost like a built-in hedge where you had the possibility you could win both of them based on the statistics from the past. Okay, now this range movement was smaller, right? 26 pips, as opposed to on the Euro USD, the range movement was 53 pips. Okay, so I kind of lean still towards the Euro USD pairing. Okay, but you can look through each currency pairing and announcement and have a plan. You could do this over the weekend and have a plan for the upcoming week. Which currency pairings are you going to trade on and in which direction based on how the announcement comes in? Okay, so very simple strategy with a lot of powerful data that with these tools, it's simple to see the data. Imagine without this tool, you'd have to study all the old charts. You might not even be able to look back that far in the charts to find how did they move after the last announcements, in what direction and how far. It would be very complicated to try and do that. Well, the data is compiled for you here. So you can do some data-driven trading based on how the current announcements come in, all right? Now we can look at some US announcements as well. Okay, we've got the employment change numbers coming out of the US. Also a tradable announcement. If this comes in above forecast, 57% to 43, I'm not so interested in that. So if it's an above forecast number that comes in, I'll probably sit that one out on the Euro USD pairing anyways, because it's almost 50-50. But what's interesting is if you look, if it comes in below forecast, now I see a large statistical advantage, 80% of the time. Okay, 4 out of 5 times, if it came in below forecast, the euro climbed against the USD. So this is the one I would be more interested in. And you see range movement, 45, 46 pips almost. And in the first 5 minutes, only 13 pip range movement. Okay, the highest one went 18. But after 4 hours, we're looking at movements that have a range of 46 pips almost. Okay. So this is something that you could be selective. If it comes in one way, the data shows there's not as big of a statistical advantage. Maybe I sit it out. If it comes in the other way, 80 to 20%, maybe you take your shot at a move if you can get a good entry point in that first 5 minutes. Okay, just some ideas to use this fundamental news to put together some strategies that you have the strategy written down in advance. So that as soon as the numbers come in, you know exactly what you're going to do. And you know the distance for the potential take profit and stop loss settings because you can see the range movements that have happened in the past, both down and up. Okay. So we're looking here then at some other announcements today. If we scroll down, we've got initial jobless claims, okay, after the ADP employment. We also can look Euro USD or other currency pairings. If this comes in above forecast, look at that, 80%, 4 out of 5 again, the USD strengthens and pulls the Euro down, okay? And the one that went the wrong way barely moved the wrong way, okay? So you're really looking at a huge advantage from the past that if this particular initial jobless claims announcement comes in above forecast, we can see from the past a huge statistical advantage to sell, okay? With a range movement of over 51 pips after 4 hours, average range movement. And in the first 5 minutes, half of them were up instead of down, which means you could have gotten even better entry point if you were planning to sell. And the range movement was under 15 pips in that first 5 minutes. And then you see the big move in those 4 hours downward. Okay, so even this one was higher after 5 minutes and came back down. So really all of these could have been winners, 100% from the past if you were selling when the data came in above forecast. Okay, you're not going to win 100% of the time all the time, right? But this data is really strong and it shows that you could have a good probability of winning on in this case, a sell move if the numbers come in above forecast. And it's interesting because if they come in below forecast, it's still good data, but not as strong, but 67% of the time up, 33% down. And again, you see the size movement up is bigger than the movement size down. So after 4 hours, statistical advantage to sell from or to buy from the past if it comes in below forecast. In the first 5 minutes, it went the other way. So again, the first 5 minutes, the false move down. After 4 hours, the majority of the time up. And even these ones that ended up down, if you look after 5 minutes, were also maybe down. So even a better win percentage than 67%, potentially, depending on entry point, could have been had in the past if you bought within the first 5 minutes when the numbers came in below forecast. So when you see the flip reverse, below forecast, data says buy, above forecast, data says sell, you see a really strong relationship between how the numbers come in and which way the market will move, okay? So some really good options here to trade on based on these announcements. Now, one word of caution. If you're gonna trade on this one based on how the data comes in, maybe don't use Euro USD because there's a US announcement right after it and another US announcement. So it could mess up the movement that this announcement caused on Euro USD when the US announcements come in. So you might do Euro GBP or Euro JPY on this announcement, check the statistics for those pairings. And when this one comes in, then you can use GBP USD or USD JPY, something that's neutral from the other announcements that could mess it up, okay? Robert, you're asking how do we open the AvaTrade page? You start out on our main website, avatrade.com. You click log in the upper right, and you enter your email address and password. That's it, and then you'll be in the web trade, okay? All right, so I think you get the point. Today, there are a lot of announcements. We don't have to look at every single one, but you can take the time each weekend to look at the upcoming week's announcements and find the ones that maybe have that 80% to 20% statistical advantage from the past and say, okay, that's one I'll pay attention to those numbers when they come in, and maybe I'll take a shot if I like the entry point in that first 5 minutes, okay, to trade based on the past statistics. All right, so then we can look into tomorrow. The biggest announcement each month out of the US is tomorrow. If we scroll down, we look at the non-farm payrolls. Okay, non-farm payroll announcement. It's the biggest jobs announcement out of the US each month. And what we see here is that if these come in above forecast, and we're looking at Euro USD as the pairing, it's a mess. It's exactly 50-50. Half of them go up, half of them go down. again, I'm not interested in trying to buy or sell on that. It's like a flip of a coin there, 50-50. But if the announcement comes in below forecast for the non-farm payroll tomorrow, look at that. 75% of the time then, the USD weakens and the euro climbs against the USD. And the one time in the past year when these numbers came in below forecast that the euro did not climb, it just barely dropped, okay? Just barely dropped. And it's likely even after a longer time period than 4 hours, it also ended up going up, okay? But we could see after 4 hours, over 73 pips range movement and 75% statistical advantage to have bought when the numbers came in below forecast. So here I would be selective tomorrow, and I'm waiting on the non-farm payroll data, and only if it comes in below forecast, maybe am I interested in making a move on the Euro USD based on this data, okay? If I look 5 minutes after the announcement, average range movement only 27 pips. The one that ended up down actually was down maybe further in the first 5 minutes. It came back up over those 4 hours. So again, maybe actually 100% of them climbed after 4 hours if you got in within the first 5 minutes from the entry point you would have had to how far it went after 4 hours, okay? So very powerful data here, and it looks like an announcement that might interest a lot of traders to trade based on that past data, okay? The non-farm payroll numbers. Now, there are other announcements out of the European Union, for example, tomorrow, the PPI data, also a very important announcement. And if this comes in above forecast, 80% drop, drops 80% of the time in the past if the PPI data comes in above forecast, okay? If it comes in below forecast, more like 50-50, right? That doesn't look like strong data, okay? I don't know that I'd be interested in trading either direction on this one. This is obvious why I wouldn't be. It's almost 50-50 and not a big statistical advantage. If it comes in below forecast based on the past, above forecast, it shows 80%, but 3 of the ones that dropped barely dropped. Look here, barely dropped, barely dropped, barely dropped. The one that went the wrong way as much as these 3 combined went the right way. There's only one actually that went flying down that kind of skewed this data to show a large range movement. The rest of these barely moved or went the wrong way. So this announcement, even though it's 80-20, sometimes you have to look at, okay, but what was the consistency of movement for the 80% that went the right way? And I don't like the consistency here. These barely moved, and only one really went a long distance in the sell position. So this one, I think I would pass in both directions on, right? And each trader will have their own opinion on that, okay? You could look at that same data and maybe interpret it a little bit different, and that's okay. That's the year-over-year data. Sometimes you can say, okay, at the same time, there are other announcements, and maybe one of these other announcements have a larger effect. So we could check the inflation rate, for example, that comes out at the same time. Maybe this one shows a better statistical advantage. If the inflation rate comes in above forecast, we see 67% drop. Below forecast, 60% drop. So it doesn't matter which way this announcement came in, it dropped either way, which tells me the movement wasn't based on this announcement. So I'm not so interested in that one either. And so you can see that you can start to get a feel for which announcements would you actually be interested in trading on and have that plan in advance before the week starts, okay? And usually I can go through this calendar and I can find 15 or so each week that I think have strong statistical advantages from the past data that I could potentially trade on each week. And so that's a large number of trades. That adds up if you can find 10 or 15 a week. And you know, by the end of the month, you have 40 to 60 trades based on one strategy like this. You could quickly see the data then after a month or two and see, am I winning more than I'm losing or not? And if you are, then maybe you're onto something, right? With the timing and how you're interpreting the data. And it won't be the same for everybody. Because like I said, it's up to each trader which announcements you're going to think are the best for you and your schedule and the timing of how you place your trades, okay? And the patience of how you let them run as well once you've placed them. There's also other announcements earlier in the day. Retail sales, this one I think will show better data in terms of predictability. The retail sales have been a strongly tradable announcement. So above forecast, 67% up, below forecast, 78% down. I always like to see that if it comes in one way, there's a statistical advantage to trade one direction. If it comes in another way, then there's a statistical advantage in the opposite direction. And the thing is, there aren't as many competing announcements at the same time when this one comes in. And that's why maybe the data is more clear. It doesn't have 5 different types of data coming in at once. It's just the retail sales mostly being looked at when this one comes in. So you see a clear advantage to sell statistically if this comes in below forecast. And if it comes in above forecast, you see a clear statistical advantage to buy. 2/3 of the time rise if it's above forecast, and 78% drop if it comes in below forecast. Okay, so this one I really like. And I kind of knew that in advance just from experience with this retail sales announcement out of Germany. So you've got different countries, different regions you can get this strategy going on. And quite easily go after some data-driven trading almost daily. Almost each day there's something. Maybe on Mondays it's more quiet, but most days you can find a couple, 2, 3 announcements that you might really like, okay? To take a shot at going with the data to try and pull some profits. Any questions before I move on to something else? I'll pause for a moment. Okay, great. I don't see any questions popping up, so I'll continue on. Another spot we can look for fundamental news. There's a news feed here. And this news feed is nice because it takes some of the information we just looked at from the economic calendar, summarizes the data that already came in, and then tells you instruments down here that are related to that announcement. So this information that you read here in the news feed, then it's anticipated that that information might help you make a decision as to whether to buy or sell on the instruments that are listed below it, okay? In this case, 2 different instruments, Trading Central believes and AvaTrade believes could be related to this data to help you make a decision whether to buy or sell here. Okay, so it's basically the same information that you can see on the economic calendar, but looked at in a different format for you to be able to quickly see what already happened and instruments that could react to that data. Okay, here's one for crude oil. Okay, some news that came out about crude oil, and obviously crude oil is related to that news then to buy or sell on. So you determine whether it's not a signal, it's not telling you to buy or sell. It's giving you the news, and then you decide if that news tells you that maybe you should buy or maybe you should sell, okay? Now, a third tool we can look at is the market buzz. And this is a real time saver, just like that economic calendar, okay? The economic calendar crunched all that data for you and put it together in a way that you can interpret it easy. Here, the time saving is by searching the internet and finding all kinds of articles and information related to whatever you want to trade on. So the larger the circle, the more information that was found about it online. We could look at Tesla or any of these stocks. You also can switch to cryptocurrencies, standard currencies, commodities, and indices. There's news found on all of them. And so I click on Tesla, it loads a page dedicated then to Tesla. It has the recent news articles here, so you can quickly start to read and see if there's news that makes you think that you should buy or sell on the instrument. And so, I saw an article that came in just a little while back that BYD overtakes Tesla as the world's top electric vehicle maker. That's interesting to know. Tesla is no longer the top of the class in electric vehicle making and sales. There's another company that overtook them. And so you can find articles like that, and when you click on the article, you get a synopsis, like a summary, and you also can get the entire article if you follow the link. Okay, so you can read through the entire article and make up your own mind. What are they saying about Tesla in this case? Is it good news or bad news? And you find that information so quickly through this tool that, and this article came out just 6 hours ago, so it's today. This is new information that came out today. And the closer you are to the top, you see this came out 1 hour ago and 2 hours ago. So you can quickly find some information that might make you feel, hey, I should buy on this or sell on that. And then you also look here, have the technical analysis. There's a trend analysis right here. The analysts at Trading Central already feel that the price might fall over 14%. Then you combine that with articles that maybe you read that seem like maybe not good news for Tesla as well, if they've lost the #1 footing as an electric vehicle maker. So you combine these together and say, the technical analysis signal says to sell. The news after I read a few articles maybe tells me I should sell. You can even look at the technical analysis in the signal and see the prices that they suggest to take profit, and also where the pivot line would be, that you might put your stop loss above there, because if it breaks above the pivot line that they draw, then they say you should go after further upside. But unless it does that, they're saying sell. Okay, so this signal helps you with where to put your stop loss, where to put your take profit, what direction they think it'll go. And if all of that agrees with your own fundamental news analysis as you read the articles, then it becomes very easy to make a decision what way you might trade. Okay, so this is a whole nother strategy concept you can use. Reading news articles, looking at the trend signal, the trend analysis, and deciding if everything agrees enough for you to make a trade. Okay, and with this, you don't need to wait for announcements to come out, right? You can trade at any time of the day, as long as the instrument is tradable. If it's a US stock, you need to wait for the US market to open. But if we were looking at a major index or a European stock, well, they're already tradable, okay? Or currency pairings or commodities, whatever you might be looking at with this tool. So those two things could be enough to fill your trading day. Just those two strategies, looking for the week, each weekend, for what announcements you put in your schedule to plan to trade on based on the past data, and then also with other free time, checking the articles and the signals, the trend analysis to see which ones you're interested in trading on. And that could get you, with the announcements and looking at articles, you could have 15 or 20 trades a week easy. Maybe more, depending on how much time you put into reading different articles about different instruments. Okay, and so the other side of that is make sure if you're taking that many trades each week, that each trade is the type of risk that you would want. I don't know whether that's 1% risk on your account per trade, or 0.5% or 2%. Everyone's different in their risk management, but make sure you have a plan for that. And when you buy or sell on anything, you can see right away how much you're risking. If you program a stop loss price, it tells you. With the trade size I have, I'd be risking 2,116 to this price. If I change the trade size, okay, it automatically adjusts. Now I'm only risking 141 to this stop loss. So whatever stop loss price you put, right, it takes the trade size and the distance to your stop loss and tells you how much you're risking. So for each trade, you can risk manage exactly how you want it and base your trades on the fundamental news with these different strategies and see what kind of success you can have. And in my mind, there's no reason why you can't eventually have success with these types of strategies that are based on real news, real information that from the past we can see does have an effect on the market, okay, and which way the movements will occur. Any questions, comments before we end things? Okay, Joanne, I didn't see the question. Where can you learn about hedging? Okay, so the concept of hedging is simple. All right, if let's say I've already bought on a trade, it doesn't matter what it is, let's say gold. Maybe I did a one lot buy on gold. Maybe I think gold's going to go up to a new all-time high, and I bought one lot. And then at some point, maybe it starts going the wrong way. And I don't want to close it maybe because I think eventually it'll go back the right way, but I want to cover my risk temporarily anyways, until I think it'll start going back up. So if I take a one lot sell on gold at the same time that I already had a one lot buy, then I'm fully hedged. You would call that being fully hedged, meaning no matter which way it moves now, I'm not going to take any more losses other than overnight interest. But you know, when you're fully hedged, you also can't profit either, because no matter which way it goes, you're winning on one and losing on the other. The idea of hedging is to do that maybe during a time when you have market uncertainty, but that with the plan eventually to start to unhedge the trade as you become more certain as to what direction it will go. Okay, perhaps I bought a one lot trade thinking it would go to an all-time high on gold. It started to go the wrong way. I didn't want to close it, so I hedged. I sold one lot, and then eventually the news cycle changes, and I see that, wow, actually I think gold will drop now. I can actually keep the sell trade and unhedge by closing my original buy trade once I'm more certain that I think the market will drop. Or if vice versa, if eventually I think, okay, now I think it'll go back up, then I start to close off the sell trade. And you can unhedge partially or completely, depending on how certain you are of which way it will go eventually. And you can partially hedge from the beginning, meaning if I had a one lot buy and I'd become kind of 50-50 on the movement, maybe I only do half a hedge. I sell half a lot while I have the one lot buy, so that if it does drop, I'm only losing half of what I would have, but maybe I'm still think it might go up, so I leave more on the buy than the sell. So I can still profit if it goes the right way, but I lose less than I would have if it goes the wrong way, because I've partially hedged by putting maybe half a lot sell when I had one lot buy. Okay, this is the idea of hedging. It's for traders who prefer not to close their trades, so they don't put a stop loss, which would close the trade if it was going the wrong way, but instead they put a hedge position, which could be set up as a pending order. So in the example of me buying on a one lot buy on gold, I could have that hedge trade, a one lot sell position, down below a support level that if it breaks below that price, I'm afraid it could plunge. And so I have a pending sell position below a certain price that if it hits that price, now it opens the sell position and I'm fully hedged. And at some point, then I decide which one of those I want to close and which one I want to leave open. But then my risk is covered, at least temporarily. If that hedge position kicks in, that pending order in that example would be the hedge position. So you can manually open a trade to hedge, or you can have a pending order as part of your hedging strategy. Does that help, Joanne? I hope I didn't confuse you. Any other questions? I'm happy to cover questions like that are related to trading or something else. Maybe something about your account or something, I don't know. Okay, I don't see any other questions that have popped up, so I think this is a good place to stop. Good luck with the trading. If you trade on any of those announcements we went over, pick the ones you like best in the direction you think makes sense based on the past data. Also, the market buzz, you could look at Tesla like we looked at. It actually looks like a pretty solid one to potentially trade on once the US market comes open. But there are a lot of stocks there and different instruments in that market buzz as well that I think also you should probably look at and decide which ones you like best. So a couple of strategies there you can use today and tomorrow with some of the announcements. And obviously you have some other trading strategies you could use as well. But at least you have a couple ideas here from today's session. All right, everybody, thank you for joining, and good luck with your trading the rest of the week.